Hey guys, I just wanted to do a quick video. This is Jon Smith from Guaranteed Rate Affinity. He's one of the lenders that we work with at Coldwell Banker. And I have a lot of buyers asking questions about credit scores and how to get a loan. So John's here to answer some of those questions. So the first question is, I want to get a house. It's my first time, but my credit score isn't great. So number one, what does it need to be?
All right.
And number two, how do I fix it?
Hey everyone. Thanks for doing this, actually.
Yeah.
I'm John, Guaranteed Rate, and so to answer your question, it really depends. And so, typically credit scores are going to vary depending on the type of loan that you do. So the majority of loans that we do would fall within a conventional or an FHA loan. And so for a conventional loan, we're going to require typically a 620 credit score is the bare minimum that's required, although that won't always work depending on how much money the client's putting down and so on. And so if somebody's doing a lower down payment, it maybe we require a little bit higher than a 620. But if you look up the standard guidelines, the minimum score would be a 620 for conventional. On FHA, we typically want to see at least a 600 credit score. That can kind of vary depending on the lender. There are some that will go down to like 580, some require a 620, some even higher than that. So it'll really depend on the individual lender that's doing the transaction. But I would say generally 600 is what you're going to be looking for on FHA. So, yeah.
What about a VA loan? Are there credit limits for that as well?
There are. So, well, yes and no. So VA actually doesn't have a minimum credit score that they require. They don't actually say anything on the VA guidelines. However, the individual lender will set the guidelines for VA loans. So our requirement is 600, and we'll do an exception down to 580. So 600 is what we'd be looking for. And again, that's one of those things that's going to vary depending on the lender. So.
All right. And then if somebody is concerned about their credit score, they're under that 600, 620 mark, what would be a good way to raise their score?
So everybody's situation is different. I mean, so if somebody has credit that they're just overusing and they've maxed out all their credit cards, I'd say pay your balances down. Get everything at least to 30% of whatever the limit is. 30% of the limit is going to maximize your credit rating. You never want to go over 50% if at all possible. So sometimes it's an easy fix. Sometimes it's just a matter of paying down the credit cards to an acceptable point, and then maybe doing a rescore on the credit to get the score up to where it needs to be. Other times it takes a little bit of work. Sometimes there's a lot of collections that may need to be addressed. Maybe recent credit events like bankruptcies or foreclosures that take a little bit longer to kind of fall off of the credit. So it would really depend, on what the situation is. But, usually if somebody calls us, I'll take a look at the credit. We have a really cool system that we can run things through, and we can simulate, if people do certain things, what the credit score would go up to, so that we have an opportunity to try to get them into a position to where they can buy.
Okay. And then the other thing I wanted to touch on today was a pre-approval versus a pre-qualification. A lot of times now when we're submitting offers, there's a pre-approval required. So what differentiates that from just a pre-qualification?
That's a good question. So everyone's going to want to see a pre-approval for sure. A pre-qual is basically where I would talk to somebody and I would say, what do you think your credit score is? How much money do you make? What is your debt? And I would say, based on that information, I personally believe that I could get you approved for X amount of dollars. So that's a pre-qual. A pre-approval, we do a full loan application. We check credit, we check income, assets, and we actually submit it through our automated underwriting software that would spit out an approval to us. And so based on the findings that we get through the automated underwriting engine, we can issue a pre-approval letter.
And how long is the pre-approval valid?
They're good for 90 days. So the only reason they're good for 90 days is because the credit report's only good for 90. And so if we need to extend that beyond the 90 days, we would just rerun the credit report and give you another 90 days on the approval.
Okay. And then just one more question about that. How does that pre-approval affect your credit score?
So it only affects at about 2 points. So it affects at the least of any of the credit inquiries. So when you compare it to like a credit card or, car loan, my favorite is people call me and they say, well, you're not going to run my credit like 30 times, So we're not a car dealership, we won't run your credit like 30 times. And so we run it one time, 2 points. And you actually have a window of about 3 weeks to run it with multiple lenders without it impacting your score whatsoever.
Okay,
So
great. All right, well, thank you. I appreciate it. That was a lot of good information.
Yeah.
If you guys have any more questions for John, you can send me a message. And if anyone wanted to contact you for more questions, how would they do that?
call Ashley. No. Yeah.
All right. Let me know if you need anything else, guys, and we'll see you later.
All right. Thank you.